Coding. All right, so that's that. So I don't even have anything to teach. I don't know what to teach. I have nothing to teach. So we'll just discuss some trades and examples of other trades. And just basically our normal rules and what to do and what not to do. Okay, so that's all. Um, okay, look at this trade from this month, last week, I think. So let's go down to 1 hour and have a better view of this trade. So from here, you can see the sweep. You can see the sweep. Now, remember when I told you in one of our sessions, I told you a secret about seeing two lows like this. I said something like, if there are two lows, like two lows in very close proximity, like this is your protected low, and there is another low in very close proximity to it. Now, if that low, look at something here. If the wick of that low is in contact with the wick of your protected low, most likely it just assume it is one low. So I'll just say this is my sweep. Okay, so this is one low. Break of structure, liquidity, and entry. So yeah, I posted this trade on our Telegram. Okay, so yeah, this is it. Nothing nothing so ambiguous about this one. So perfect. 3 hour. So on the same day, there was a similar setup on NZD USD. Yeah, somewhere around here too. So you can see also that there was a sweep, right? A break of structure, liquidity, and this was the entry for the trade, straight to take profits. And I actually missed this one, though it was on the same day, but I was absent-minded. So look at this one, 3.5 hour too. So yeah, I remember since this sweep is looking kind of somehow, always remember to measure your sweeps. You can just measure, check, is it in the 50% Fibonacci? Okay, so if I haven't told you before, I want to tell you now that if your sweep, I mean the load that is being swept, if it's not in contact with your 50% Fibonacci when you draw, I've taught you how to draw now. To It's the same method of drawing when you check for liquidity and the same method when you check for the sweep. So you draw from the high that was broken. So this was where we had our BOS right here. So from this high where we had our BOS, you place your Fibonacci there and draw to your protected low if it's in a buy scenario. If it's in a sell scenario, let's assume you have a high and the high was swept, break of structure, liquidity, whatever, blah, blah, blah. So if you want to measure the sweep here, you measure from the low that was broken, right, to your protected high, and your sweep must be in the 50%. Okay, so likewise, my sweep must be in the 50% to be called a valid sweep. So if it's not in the 50% Fibonacci, it is not a valid sweep. And I will show you an example of a trade where the trade automatically failed because there was a presumed sweep, but it was not a sweep. Why? Because the low that was swept did not appear in the 50% Fibonacci. And that being said, you can measure your liquidity so it's close enough to the 50%. Sometimes if it's not so close or you still think the trade is good enough, you measure from the swing high, okay? Measure from the swing high to the protected low, and it must be in the 50%. When you measure like this, it must be in the 50%. So that gave rise to the trade. Yeah, you can select your POI on 4-hour time frame. This other block, maybe yeah, this other block, or maybe 3-hour. If you're looking for refined POIs, or sometimes over refining can make you miss a trade. So I prefer higher time frame POIs to lower time frame POIs because price will always choose the higher time frame over the lower time frame. So it's very understandable. So that's that. So yeah, for the trade I said I was going to show you guys where not being in the 50% as a sweep can make you to lose a trade. So it was a loss I took in January, USD CHF. All right. And in that particular case, in this particular case, it was not even my fault because I thought everything was in order. But unfortunately for me, everything was not in order. Okay, I think it was somewhere around here. So I wanted a reaction trade. So look at this whole mess up here. So from the look of things here, if you already know how to recognize patterns, if you already know how to, by maybe constant practice, when you see a sweep and a break of structure, even if it is on lower time frame, your eyes will automatically select it out. So seeing this, I already knew there was a low here, right? And the low was taken out and price broke structure to the upside, though there were some minor structure and all that to the upside, okay? And even though I didn't want a full trade here, I never wanted a full trade here because I know when you go to higher time frame, you're not going to see all this liquidity. It's too small, okay? From constant practice, I already know this. When I go to higher time frame, this will disappear. So I didn't want a full trade. I just wanted price to do something like this, maybe give me a reaction trade, okay? And I go just enter from here and have my own trade. So this is what I expected from here. So going to the daily time frame, on daily time frame, it appeared good too. Okay, it appeared to good too, not too good, but good. So I also still had the low. Now I think it's a bit clearer, the low, sweep, and break of structure. Now I always told you when your structure is not complete, don't go and be looking for confirmation that you see confirmation and take a full buy. Maybe you see confirmation, this, liquidity, then boom, you take a full buy. It will not work. So when you see things like this, just look for a reaction trade and target the high of the reaction trade. So this should be your trade in a scenario like this. Your trade is actually supposed to stop here. This is where you're supposed to take profit. Okay. Just this small, whatever, not the entire. Don't go and be targeting this high. It doesn't always work. So that being said, I saw this. I saw this. Now I went to, since it's a daily structure, I went to 1 hour. Okay. Now let me show you something. I went to 1 hour, and of course I saw what I was looking for, which is what? A proper sweep. I saw a proper sweep. Okay. So if you attended our last session, you should know why there is a sweep here. It's called the candle theory. So there was a sweep and liquidity, break of structure. So sorry. So sorry. Can you now see my screen? Sorry, I made a mistake. You can tell me in the chat if you can see my screen. Tell me in the chat.
Yes.
All right. So that being said, I saw this and I expected price to just simply track back, take out my liquidity and start buying. So for me to target this place, which is a full reaction trade, okay? This is on a normal day. This will play out fine, no issues, right? If you know that on a normal day, this will play out fine. Now, this trade failed and I was surprised. Why? Why did this trade fail? First of all, I had a small clue that this trade was going to fail because look at this, a proper breakout and retest. But this is not why it failed, just kind of a clue. Most times the trend line will tell you that probably there's an issue with this trade. Okay. Most of the times the trend line will just tell you that there's an issue with this trade. Now, the problem is that when your major structure here is defective, when your major structure is defective, like what I was trying to get here, when it is defective, when there is no sweep here, this reaction trade can never hold. It will not happen. It can never hold. Okay. So now, how did I know that there was a defect in this trade? Now, I'm somebody that I'm so curious that when I take a loss, I go back to my chart, I keep studying, I keep looking for why that trade failed. That's how I found out most of the things I know. Like over time. Like I take a loss, I go and study, I record, I screenshot and post it in my journal, stuff like that. So I started taking note of similar reoccurrence and all these things. Now, I thought, okay, could it be that this trade, the sweep is not in the 50%? And I went to daily time frame. So I went to daily time frame and said, okay, let me measure this. So I'm going to measure it and you guys will tell me whether it's in the 50% or not. So I'll measure it now. So from the high that was broken to my protected low. So you guys tell me, is it in the 50%? Tell me, is this in the 50%?
Is it for the social liquidity?
No, no,
No,
no,
this
not for the sweep. I'm saying for the sweep. Who is talking?
no, 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 no.
Nicholas. You said it's not in the 50% for the sweep.
For the sweep, no.
Look properly. Let me zoom in. Can you see clearly now? Is it in the 50%?
Is that red candle part of the sweep?
Yes, of course. Look at it now.
Okay,
So it's
then
supposed to
yes.
be so it's supposed to be something like this. The low that was swept, the sweep, and protected low, then break of structure. So I was just looking for a reaction trade between This is 2 days, right? 1, 2, 3. So within these 3 days here, because this is the daily time frame, I
Mm.
wanted just a reaction trade on 1 hour. So here it appears that yes, my structure is a proper sweep, right? It appears that my structure
Yes.
is a proper sweep. Now, after searching and searching and searching and searching and searching for like one entire week, I remembered something. Sometimes I cross-check my charts like across different brokers. So I use Owanda and Pepperstone, okay? Because sometimes some brokers like FXCM, Owanda, they just scrape out some part of the chart like these new week candles and all these things. So they just smoothen the candles. Now I went to Pepperstone and searched USDCHF. So I went to Pepperstone and I measured, okay, it's still even there since I studied it. And I measured it. Lo and behold, the sweep was not in the 50%. So that means whatever I was doing here was rubbish. Do you understand?
Yes.
Yeah. So in the first place, this was an entire trap set up for me. So I was not even supposed to be engaging in this whole thing. And to even make it a little bit more clear, if you look at this structure on 4 hour time frame, you see that the entire lows here appear to be on a trend line. And you know the trend line rule. When your
Yes.
protected low is in a trend line, obviously price will smash it out. Okay, so sometimes you have to cross check on brokers. So I use Oranda and Pepperstone to cross check. So because Pepperstone gives me accurate information, Oranda gives me good structure. That's why I use the both. So which means that since there was no sweep here, there was indeed no reason for us to need a reaction here. Okay, so that's that for this. Hope is understood.
Yes.
All right. So which other trade? Okay, let me show you maybe one more example of this one. This one happened like last year. Mm, That should be GBPCHF. GBPCHF. No, no, GBP card. Last year, around August. So let me go to the charts. Okay, yeah, look at it here. Mm. So I'm going to show you guys from here. So look at this. So I wanted a reaction trade here because on daily time frame, I could obviously see a sweep. So this is a sweep now to the downside, break of structure. Obviously, for this structure, there is no liquidity. So I'm not looking for a full buy. I don't want to buy from here and go all the way up. I just need price to create something for me here on lower time frame, which is called a reaction trade. You guys know now. And I'll just take my reaction trade, target from here to maybe the end of the reaction, and I'll be out. Okay. So, which is the normal style that I showed you guys. Now, on the daily time frame, this appeared as a proper sweep. Now, two laws applied here, the higher time frame superiority and also the 50% Fibonacci rule. Now, if you look at this on the daily time frame, it looks like a proper sweep, right? And a break of structure where you will just need a reaction. Now, if you go to the weekly time frame, going to the weekly time frame. Now, if you've been following my charts, who is mood? Who is mood? Mood, stop marking on my screen or I'll boot you from the session. So as you can see that when we came to the um, daily time frame, you can see that to the weekly time frame, you can see that your sweep on the daily time frame disappeared. Let me show you so that it's still clear to you. So look at the sweep on the daily time frame, this low, right? This low here, this is the sweep. Break of structure, looking for a reaction somewhere around here, maybe on 4 hour. Okay. Now you go to weekly time frame. That sweep has disappeared. Let me delete this. So that sweep has disappeared. And you now have to conform. Okay. Forget about this part. Forget this whole area. Let's talk about the, the parts where price has not played out. So forget about this whole area. So you are now, since you are on the weekly time frame, you have to conform to the weekly time frame structure. Now, what can you see on weekly time frame? If you've been following my charts or following me on Twitter and studying my posts, you know that based on candle theory that there is a sweep here. Okay, there is a sweep here and then break of structure. Now, this is higher time frame superiority. Why? Because the daily time frame structure has been scrapped out. Okay, and now you now have to conform to the weekly structure. Now, judging by that, what's the next thing you need to check? Since this sweep looks like this, it's actually far. You need to check if it's in the 50% Fibonacci. So measure from here down, and you see that it's not in the 50% Fibonacci. Okay, it's not in the 50% Fibonacci. I hope that's very clear. So meanwhile, and funny enough, price is going to give you the reaction trade. Okay, you are going to get the reaction trade. But the funny thing is that the reaction trade is going to fail. So let me mark out this area. I will go to 4 hour and check. So this is where the POI was on daily time frame. So you can see this is the area. So maybe this is the POI here, and this is where you are expecting the reaction trade. So let's go to 4 hour and check it out. So 4 hour. So looking at 4 hour here, and of course, price will always deliver it to your hands so that you self you make mistakes and take your stop loss. So looking at this here, already if you are conversant with the pattern or the structure, you can already see the trade. So let's assume you've not seen that it failed. You now have what here? You have this sweep here, and you have the liquidity and all break of structure. All this is liquidity, and then price tap back in here. Now there's a POI here, which is an order block. Look at this order block here. So price tap into that order block. Now, since you don't know about the 50% Fibonacci rule, now you are going to take this as a reaction trade because you've gone to my YouTube, you've seen the reaction trade videos on GBP card, and you don't look properly. You don't see that my sweeps are actually in the 50% Fibonacci, or you've been seeing my charts, my post on Twitter about the reaction trade. So we are very sure that this one is a jackpot. So what happens is you place your buy position here, right, with your stop loss below the low. Like I always tell you, if it's a correct trade, your stop loss is just meant to be below the low, and you target your 3R, okay, or the high, anyone. and then price begins to move in your direction, good, and then comes back to knock you out in a funny way. So because of that single higher time frame effect on the weekly time frame here, where there was no there was no proper sweep because of this single effect, the reaction trade failed. So how many of you attended this session? So this is the first time I'm seeing this on, on our live sessions or peace monthly free session, whatever. So I teach it in my private mentorship. So luckily for you guys, we are here today. And that being said, I'll just take maybe one or two questions from you guys and call it a day. So does anybody have anything to ask? So I showed you like four trades today, NZD, USD, Euro USD, and I showed you which losses, Euro JPY, I showed you USD CHF, GBP card, and was there any other one I showed? So any question? My chat.
Boss, good evening.
You,
Okay, first of all, thank you for the free session. And my question goes like this. Looking at the last chart you just used as your illustration, that was the last one. Yes.
okay.
When when doing your analysis and choosing the trades to take, does the second break of structure, is it a priority for you? Like the way it breaks, the second BOS, does the way the candle breaks, is it a priority for you? You don't just take it into consideration based on what you've seen previously
No,
from
it's
your
not. It's
previous
not.
trades. Right?
It's not a priority as long as type two. This is type two, right? This sweep, break of structure, liquidity. Then maybe another break. Then price returns. This is what you're asking, right? Whether I consider this break
Yes,
as
yes,
important. Now
yes,
but since it's type 2, now depending on my confirmation, sometimes I even take type 3 where the second break is below here. But I don't take it at all times, depending on the area. That one is based on experience. But as far as it's type 2, as long as the second candle goes above, whether it's a body break or with a candle, I'm satisfied. Like here, let me show you here. You see this side. You see the
yeah,
second candle does not use a body. It's just a wick. So Adibin, this
yeah.
trade was correct. Just for this to come above here, it's already okay. You don't need a body
Uh,
break. Yeah.
all right. Thank you.
Okay. Welcome.
And one more question, in case anybody does not have another
All right.
question. Can I go ahead, please?
Yeah. Yeah.
From your, because you say you do a lot of journaling and studying from your previous trades. From your experience, which one would you think is more profitable during the long run? Counter trading or trading with the trend? And if you are to use, for example, now, counter trading, is there like a particular type that you've observed is more profitable for counter trading? Or you say, okay, this one works better with continuation? Hope the question was able to articulate properly.
Yeah. Yeah. I understand you. So counter trading is like counter trading is like maybe price has been moving upward, upward, up. And suddenly you see a sell here, like sweep, break of structure, liquidity. Now you're prepared to sell like this, but
Yes,
this is counter trading. Now, most of the times, like 70% of the time, this is a proper trap. Price will just come and zoom you out like this and even continue
yes,
upwards. Okay, but
Yeah.
now there is a cheat code for knowing when your counter trades are about to play out, and it's called confirmation. Do you follow me on Twitter?
Yes. And
Which
yeah, thank
means
you for that. There's a trade you made on Twitter, the
exactly
one you
on
told me. That was very,
confirmation.
very helpful.
So when what you do for things like this is when price arrives at your POI like this, since it's a counter trade, now at the peak of the trend, maybe let me say on your POI, since this trade is at the peak of the uptrend, when price
Yes.
arrives at your POI, you just go to lower time frame. Let me say a this is on daily time frame. Just go down to 1 hour. Look for this same pattern. Immediately price goes into your POI, you look for a sweep again on 1 hour. Look for another sweep, right? Break of structure, liquidity. So when price taps in here, it will sell all the way down to here. This will be your take profit. So when you see this on lower time frame, this is your confirmation to take this trade. But when price does not provide confirmation, sometimes it will sell, but most of the times it will take you out. So your
Okay.
your actual
So to
trade,
follow up,
your actual
yes.
trade will now be from here down to here with your stop loss at the stop loss of the confirmation like this. Do you
Yeah,
understand?
that was what I was going to ask as a follow up. Yeah, that was what I was going to ask as a follow up question. Okay,
All
for
right.
example, now using the main daily time frame type formation. Let's say the target was 1 to 3. Let's use the number 1 to 3. Then, while waiting for the confirmation, like you just said, on the lower time frame, and it finally quits, do you think it's advisable to like go for that same target, that main low you pointed out, the main one as a profit, or just take a small 1 to 3 from the confirmation and just leave? Because over time for me, yeah, if I when I normally use the confirmation, price just keep printing and printing and printing. That's all I want to see. And because I use like I trade mainly profits, and you know the daily drawdown and that stuff. Once price gets to like very high profit, any little drawdown now, you might just
You,
hit your daily. You might
I
just
did.
hit any little pullback. We just trigger daily drawdown. Do you think it's advisable, yeah, to go for that main target, or just get the usual 1 to 3 and just leave and not be greedy?
Okay. So I will have just 2 minutes. So let me just clear this up. So in a case like this, since you are using daily drawdown, you can just aim for the high of the confirmation. If it is 4 hour, but just at the high, at the low of the confirmation, if it is 4 hour, take the 4 hour and go. Okay. But at
Yeah.
times, when price is in clear structure like this, your confirmation will run all the way down. So you choose which one. But if it is a reaction trade,
Okay.
price will just come, click, click this your confirmation and reverse, take you out. So only this one will hit take profit. This one will not hit take profit. It will just come and take you
Okay.
out. I think
All
I
right.
even have
Thank
an
you.
example. Yeah, look at this one. Look at this one. See my this
Oh,
my
wait,
reaction entry.
please. Let's go back to that diagram. I just spot
L-
something
Let me show
from
you
what
this.
you just said.
Let me show you
Okay.
this. So look at this, my reaction entry here. So I just took the reaction trade instead of the main trade. I did not target this high. I just target this high. So when price came and took my take profit, just consolidate small and went back and take out this one. So this is loss for somebody that was aiming here, but I won 6R here. Do you understand? Using confirmation as my reaction trade, I got a 6R here, but somebody could have been aiming high. So when it is a reaction trade, just go for the high of the reaction, leave the main high. Do you understand that? So Can you guys hear me?